Hello and welcome to our weekly review of the crypto market on InstaForex TV channel. Let's see what happened in the crypto market between February 16 and February 22. Also, we will talk about the conspiracy against the crypto industry, its cases and consequences. On February 16, BTC USD moved almost upward and perked at $25,027. On February 21, the price hit a high of $25,233 per coin for the second time in the reporting week. A volatile trading course stretches between the two highs from the 23,540 low from February 17 to the 23,621 low from February 22. If we compare the price chart of the flagship cryptocurrency to the charts of the stock indexes and the USD index, we will see the following tendency. The Nasdaq and the S&P both show a weak correlation with the BTC. When it comes to the USD index, there is a certain pattern there. Thus, USDX perked at 105 and 104.40 against the basket of 6 major currencies on February 17 and February 22, respectively. That's BTC and the US dollar index show a mixed correlation. Therefore, on February 22, when the greenback edged lower, digital gold rose to $23,955 per coin. Yesterday, the US dollar index surged to the 104.50 weekly high on expectations of the FOMC minutes and the hawkish Federal Reserve. The released minutes report showed that the regulators would go on with a tightening to curb inflation. At the same time, most FOMC officials advocated for a slowdown in the pace of the rate hikes in February. Nevertheless, interest rates are likely to remain high for as long as the US inflation reaches the target level of 2%. Clearly, that would take some time, so policymakers voted for a more aggressive half-point rate hike. The greenback strengthened. On Wednesday, USDX broke above 104.50, but its further growth was limited. The crypto market is currently under strong pressure. The second largest cryptocurrency by market capitalization, Ethereum, edged lower after post-FOMC minutes. Nevertheless, its price chart for the past 7 days does not seem to be as volatile as that of Bitcoin. On February 17, Ethereum fell to the 1,705 low from the 1,726 high. On a Wednesday, Ethereum strengthened to $1,626 per coin on the back of the weaker greenback. Given that Ethereum now uses the proof-of-stake mechanism, some crypto enthusiasts suggest it could overtake BTC in terms of a market capitalization in the future. Moreover, a fresh update will soon take place. It will allow validators to withdraw coins. In fact, Ethereum on-chain data suggests that the selling pressure will fall after the Shanghai update. Speaking of the current sentiment in the crypto market, it has been shaped not only by the latest FOMC minutes, but also by the earnings report from Coinbase. In the fourth quarter 2022, the crypto giant's earnings plunged by 75%. The decline came due to numerous scandals in the crypto industry and, of course, the FTX drama. As a result, billions of dollars of customer funds have been blocked in litigation. Thus, the Gallows Capital crypto-focused hedge fund had $40 million stuck at FTX. On Monday, the company closed all its trading positions and shut down. While some companies are trying to adapt to the requirements of regulators, others believe that the US officials are sabotaging the crypto industry. For example, Cardano founder Charles Hoskinson said that US officials are biased against cryptocurrencies. I have a theory: regulators let the bad guys get big. and blow up because it serves the agenda, he suggested. Kraken founder Jess Powell is on the same page. He recently tweeted that regulators aim to destroy the crypto industry because it's in line with the agenda. Caitlin Long, the head of a custodian bank, also thinks US regulators inconsistent and biased. In her view, investors would never lose their funds due to the FTX collapse if regulators paid enough attention to this sector. In January, the Federal Reserve rejected custodians' applications for a master account. Earlier, Caitlin Long had sued the U.S. Central Bank for delaying a decision on its application. PAX CEO Charles Cascarilla strongly disagree with the SEC and that Binance used these stablecoins as securities. According to the businessman, stablecoins are backed by cash or cash requirements, but never by securities. Crypto giant Binance Holdings is reportedly considering cutting ties with the US business partners as regulators continue investigating the company. Binance is not licensed to operate in the United States, and the company is committed to protecting its users from any undue risk. On the other hand, the Financial Stability Board, FSB, a global watchdog, argues that many existing stablecoins will not meet high international regulatory standards. Its head class note warned the G20 finance ministers and central bank governors about that back in February. The FSB is set to release a new set of rules for cryptocurrencies and stablecoins in July 2023. On this note, our weekly review is coming to an end. Stay posted and stay tuned with us. See you soon.